Welcome back to Investing Talk podcast. Today, we're taking a close look at XP, ticker XP, a financial services platform with a significant presence in Brazil. You sent us a collection of information, and our mission is to unpack what's most important for you to understand right now. We have reports covering recent financial performance, market reactions, industry context, and even some legal developments. It seems like there's a lot to consider with XP, so let's get started.
There certainly is. And, if we look at their recent financial performance, some numbers really do jump out. In the fourth quarter of 2024, XP saw a substantial 37% year-over-year increase in total net inflows. That reached $25 billion.
$25 billion, that's quite a figure.
It is. And their active client base also expanded, hitting 4.7 million. Plus, they kept their top spot in Brazil's advisory network, over 18,200 advisors. So that really points towards some strong underlying growth.
Okay, let's break that down a bit. That level of inflow, the client growth,
Yeah,
it suggests their basic model is working, right? Connecting with customers.
it seems so.
And they're not just bringing money in, they're also sending some back to shareholders. We saw they paid a cash dividend, 65 cents per share, back in December 2024.
That's right. And on top of that, they kicked off a $1 billion share repurchase program that's set to run through November 2025.
Okay, and those kinds of moves, dividends, buybacks, they often suggest management is pretty confident about the company's value, or at least thinks the stock is cheap.
That's generally the signal, yes.
Yeah.
It suggests they believe the shares might be undervalued, and it's a way to return value.
Right, but here's where things get, a bit confusing maybe. Despite these positive signs, the financials, the capital returns, the stock price took a pretty big hit in March 2025. Shares dropped over 5% on March 12th, down to $14.14. And the latest number we have from April 18th is even lower, $13.96. What's driving that disconnect?
Well, the timing is quite striking here. This big drop happened right around the time that allegations surfaced from Grizzly Research. They're a short seller, and they essentially labeled the company as potentially operating a Ponzi scheme.
Wow, okay. Ponzi scheme, those are very strong words. What are the allegations actually about? What's the core issue they're raising?
It seemed to center on these complex retail investment products, specifically structured certificates called COEs. These are basically packaged investments. Their returns are linked to something else, an asset or index. They can offer higher yields, but they're, complicated.
Okay, COEs. And Grizzly Research says these are important for XP's profits.
That's the claim, that these COEs are quite significant for their bottom line. They specifically highlighted the Gladius and Colasu funds, suggesting they produced, and I quote, Madoff-like returns.
Madoff-like, implying returns that seem too good, maybe unsustainable.
Precisely. Returns that might suggest early investors are being paid with money from newer ones. That kind of allegation obviously creates a lot of uncertainty in the market.
And it's probably worth remembering the whole financial sector in Brazil is facing more scrutiny over these complex products lately, isn't it? This isn't just about XP in isolation.
That's a really important piece of context, yes. So any regulatory move targeting XP's COE offerings could potentially have wider ripples across the industry. It might even create openings for competitors if XP gets hit with restrictions or, reputational damage.
So we've got this real contrast. On one side, strong client growth, share buybacks maybe propping up the price a bit, but on the other side, these incredibly serious allegations hanging over them. We even saw mentions of former employees suggesting a potential liquidity issue if money stops flowing into these COEs.
That really gets to the heart of the risk-eroding investor confidence. If people get nervous about these COE products, especially after the Ponzi claim, you could see inflows dry up. That could lead to the liquidity issues mentioned.
And does that high debt-to-equity ratio we saw later factor in here? Does that add another layer of concern if inflows slow down?
It could. Financial firms often carry more debt, but a ratio that high, around 792%, definitely warrants attention, especially when there's this kind of cloud hanging over the company. It reduces financial flexibility potentially.
And now, adding another dimension, there are legal moves happening too. Multiple law firms announcing investigations.
Yes, that development really underlines how seriously these allegations are being taken. You've got Rosen Law Firm, Hagens Berman, announcing investigations on April 24th, and Pomerantz Law had already started one a bit earlier, April 22nd. When multiple firms jump in like that, it suggests they see a potential case for securities fraud based on that Grizzly report.
So putting it all together, what does it mean for the stock price hovering there in the $13, $14 range? It feels like it's caught in a tug of war.
That's a very good way to describe it. The price seems trapped between, the negative weight of these unaddressed Ponzi claims, especially about those specific funds, and the sort of good news from operations like the $18 billion in gross revenue for 2024 and the capital return programs trying to support it.
And that sell rating we saw from one analyst source, it really drives home how much weight these kinds of short seller reports can carry, sometimes creating a prove you're innocent dynamic.
It really can dominate the narrative, sometimes overshadowing the underlying numbers, at least in the short term.
Now, one thing that really jumped out from the materials you shared, at the time these reports came out, there was apparently no official word from XP about these allegations.
That's a critical point, yes. The lack of an immediate public response from the company leaves a pretty big vacuum for investors. Without their side of the story, it's much harder to judge the credibility of the short seller's claims versus the company's reported performance.
Okay, let's step back from the immediate drama for a second and look at some of those 2024 financial health numbers again. Gross revenue are $18 billion, EPS around 8.4, PE ratio just over 10x. Those seem reasonable.
On the surface, yes.
And the dividend yield, around 9%, looked pretty high, with a payout ratio suggesting they're committed to it. But then there's that debt to equity nearly 800%, which seems, well, very high. And a beta of 1.34, indicating more volatility than the market.
Context is key here, especially with financial services in Brazil. While that DE ratio would be alarming in many sectors, financial firms do tend to operate with higher leverage. Still, it's definitely something to watch closely, particularly with these current issues. And the high dividend yield is attractive, sure, but you have to weigh it against that volatility, the beta, and the overall risks we've been discussing.
And their fundamental strategy, XP's whole approach, is about being this tech-driven platform, right? Offering lots of products, lower fees, competing with the big traditional banks in Brazil like Itaú and Bradesco.
That's their core proposition, yes. An open platform, using technology to offer a wider range of investments, often at lower cost than the incumbents. That's how they've grown so quickly.
Which makes that one analyst recommendation we saw interesting, a sell rating, explicitly because of the risks from these Ponzi allegations and potential regulatory fallout. But that same source also noted that if XP can actually clear this up, navigate through it successfully, the underlying business and financials could mean a recovery is possible.
It really frames the situation perfectly. The potential downside from the allegations is clearly seen as very significant, hence the sell call. But the underlying strength of their business model is also acknowledged. It suggests that if they can manage this crisis effectively, there's a path back.
So, looking forward, it really feels like XP's near-term path hinges almost entirely on how they handle these allegations and any official actions that might follow.
That seems to be the crux of it right now. Investors, you will be watching very closely for any official statements from XP itself, and also any news on those legal investigations or any hints of regulatory scrutiny. Broader market conditions matter too, of course, but the immediate focus is squarely on resolving this cloud of allegations.
Okay, so let's try and summarize this for you. The XP situation is, well, it's complicated. You've got strong financial results, growth, money going back to shareholders, all being seriously overshadowed by these Ponzi scheme allegations. And the fact that, based on our sources, the company hadn't formally responded really adds to the uncertainty. So understanding where XP stands now means you have to weigh these conflicting signals very carefully. And keep a close eye out for official statements or regulatory news. It really brings up a fundamental question for you as an investor. How do you balance serious, potentially damaging allegations against what look like solid underlying numbers? We definitely encourage you to do your own further research. Check XP's investor relations page, look at their SEC filings to get the absolute latest information. Thanks for joining us for this analysis. Please subscribe, like, and comment if you found this helpful.